Today's sales strategy, let's make sure the girls go to college. Hi everyone, I'm Steve Savant, host of the daily talk show, Let's Get Down to Business.
And I'm Don Prenz, Senior Advisor to InsMark.
Don, we're talking about college cost needs analysis. Can you walk me through this InsMark? And where is this in the InsMark illustration system?
Yeah, this is the Survivor Needs Analysis module. There's a whole bunch of calculators in the InsMark illustration system, and this is one that helps you determine how much life insurance you need to fund financial needs at death. In this case, we have Tom and Kristen, and they're married. They have two daughters, 9 and 11, and or I think 8 and 10. And what we're trying to do is figure out how much life insurance do they need to buy so that if both of them were to die, there'd be enough money for the two girls to go to college. And so that's what's being shown here. You've got the first girl, $30,000 a year, and we're going to do that for 6 years, 4 years of college, 2 years of graduate school. We have the second girl, Jody, who's age 8. She starts in a couple years later. The same thing, 6 years at $30,000 a year. So there's a total of the far right column, $30,000, then $60,000, and you get your total amount of funding of $360,000. If the two parents were to die, that's the amount of money we'd need to allow the girls to go to college and graduate school.
Now this is a pretty straightforward college educational plan. We covered it with term insurance. We're ready to go. They're going to pick whatever funding vehicle they're going to use to put money aside. This is what we did in the first one, and we're talking about a 5% pre-tax yield assumption.
Yeah, and what the Survivor Needs Analysis does, if we plug in those needs for college costs and graduate school, the analysis comes back and is basically telling us we need $257,000 of death benefit that will then be available and would fund that $360,000.
And is that on both people then?
Yeah, you'd want to have the $250,000 of term insurance on both the husband and the wife.
Well, let's look at table 2 because now we're actually incorporating that. Is that correct?
Yes. What's happening here is that we're looking at these college costs and then we're assuming an inflation adjustment. So because the expense for college wouldn't be for a few years out, this is the same analysis assuming a 4% inflation. And so if we scroll down, with a 4% inflation, instead of doing $257,000 of insurance, that increases the death benefit need to $404,000.
And most consumers are going to look at that as a reasonable increase, especially for college.
I think 4% increase in college costs is reasonable, sure.
But now, when we're already in there doing the college planning, it sounded like since we're already there, we might as well look at the other risks and and some of the options that they can look at. So we looked at $25,000 for final expense. We looked at another $25,000 for emergency fund, $190,000 to pay off their mortgage, $25,000 upgrade their home. There's a lot of factors that we put in here just to make sure we're covering all the liabilities.
Yeah, what happened with this case is that the husband and wife came back and said, you know, it's great that we're funding for the college costs. But you know, while we're doing this term insurance is so inexpensive. Maybe we should think about other things we want to do. You know, and then they started talking about, well, we'd like to have some money for just income. We want to have money to buy their first home. And we plugged all of those things into the Survivor Needs Analysis. And here's kind of the summary of what it showed. We had cumulative financial goals, including the college costs and a bunch of other things, final expenses for the parents if they were to die. We had $1.5 million of total need. We had some assets coming in because they have some assets and some other things. So that was $742,000. The shortfall was $759,000, and we could fund that with about $500,000 of term life insurance.
On each one?
On each parent.
Okay. Now, I noticed you have a little report here I want to go to because it's kind of interesting. Walk me through this because this, I think, is worth its weight in gold. Yeah,
what we just saw is the summary graph that's produced by InsMark's Survivor Needs Analysis calculator in the InsMark system. And this is the actual data, numbers, presentation pages that actually show you. Here we're plugging in the first year, total for all years, and then ultimately it produces the graphic that we looked at, and you can see. But this is really where you plug everything in, and it actually does all the calculations. And this is where we calculated that they needed $500,000 of death benefit to fund all of those different needs.
And this is all within the same software system that we're talking about.
This is all in the InsMark system, that's right.
This is really huge. I mean, I love that ability to do that. Now, let's go to this next graph and walk me through this now, because this is a little different.
Yeah, the last thing that we like to do, again, we showed that they needed $500,000 of life insurance to fund the college and the other income needs that they wanted for the girls. Then what we did is we went back into InsMark Survivor Needs Analysis and we plugged in the new asset, which is the $500,000 of life insurance, because that's a new asset. We're assuming buying term insurance. And you see here, it shows the cumulative financial needs $1.5 million, assets $1.2 million, the additional insurance needed $0. What a great way to finish the case and say, here's where we are. After we get these policies in force, now your need is $0, and all of the needs that you wanted are taken care of. And I want to make one other point. So that's a great way, kind of a before and after. Here's where we were before, and look how great our situation is now. And again, as you're going to see in another video, one of the reasons that we do this type of analysis is to create a trusted advisory relationship with the client, because while term insurance is one way to solve this problem, we may want to come back later and look at a comprehensive Wealthy and Wise wealth planning analysis, and we may want to fund this a different way.
Well, I like the option here of coming in. We came in a basic idea of college funding, just using term, and we were able to look at some other assets, some other liabilities, and cover those as well. I think that kind of two-step process is a really great entry place, especially when you're in the first contact with a brand new client. I kind of like the prospecting tool here.
I agree. There's no way you can run this analysis and have the client not feel like you are adding tremendous value in their understanding of the risk and how life insurance can be used to benefit their situation. From there, it just gets better from there if you start with something simple and show them these types of analysis and reports.
Today's sales idea is brought to you by Ash Brokerage, the practice enhancement company.
And by InsMark, the most widely used software when it comes to strategies and presentations using cash value life insurance.